Hi guys, this is Wave 618. It's the 28th of January 2019. We've just gone midday in the UK and we're going to do an update video on Bitcoin. We're a long due an update, but just to summarize what's going to be in this video, we're going to quickly run through the long-term count, and as well as that, we're going to really focus on this shorter term technical analysis here, where we're going to be looking at Elliott Wave order blocks and pitchforks to suggest where price is going to go next. I'm going to talk in this video how potentially there is a possible bounce to the upside developing here. And so yeah, very interesting. It is against the run of play because obviously we're downtrending, we're still in a bear market. However, it is important to understand what price action is doing so that we can capitalize on any potential shorts in this bear market. So if interested, then stay tuned. Okay guys, so first things first, let's talk about the larger wave count here. So for a long time now I've been talking about this WXY playing out, with this being WX wave here, Y wave down to here. So just to quickly explain that, so we had 3 waves down. Now when this first happened, obviously we see 3 waves down, we think that is that the end of a correction. Now it's possible, obviously, it's 3 waves down from an Elliott Wave point of view, it's possible, but just look at this run that came up here and the amount of time that passed for this correction to complete. It clearly wasn't sufficient time, which for me it gave me a high time frame bias that this was just the first part of the correction. So if that's the first part of a correction, then you can expect, if it's 3 waves down, then you have to think about a WXY or a WXYXZ. So far I can actually see the completion of a WXY. So this was our 3 waves down, making the W. Followed by that we had an X wave, and for my X wave it looks to be a descending triangle, which I have broken down in previous videos, so if you want a better explanation on that, just check out those. But this was essentially wave A, B, C, D and E. So this is where our X wave finished. Following on from here we had 3 waves down. So this was our first wave, second wave, third wave, and that in itself looks like an ABC. So that's what a WXY is essentially. It's 2 corrective patterns connected by an X wave, which in itself is a corrective sequence. So the first corrective pattern was this this 3-legged pattern down, and the other corrective pattern was this ABC, and that was, those 2 patterns were connected by this X wave, which was a descending triangle. Okay, so that's just our longer term frame time count. Now just to explain why we actually came down to this level. So first of all, there was a Fibonacci extension relationship between waves W and Y. So, and we actually saw a similar thing in 2014, which is what made me think about this target in the first place. So you can see it's around 3,300 here, and we did actually surpass it slightly. We came down to, I think, at 3120. So that was the reason for this general target. It was the 0.382 extension of wave W that I thought Y would come down to. On top of that, you can actually see, I'm going to zoom in, this little blue square there, it's actually an order block in itself. And what if we go on the 4-hourly and just scroll across, and now let's zoom in on this, you can see here an order block is essentially a contrary color candle that precedes the major move up. So you can see here this was a big move up, okay, and this was the red candle. It's on the 4-hourly time frame, and you can see the top of this candle. What level is it at? It's at 3126. Okay, so remember that level. So we look at the body of the candle when we look at these order blocks. So it's at 3126. 3124 is the top of this order block. And if we just go back on our daily time frame, and let's just have a look at where price actually came down to. So if we highlight this candle, what was the low? So it's 3122.2. So yeah, as you can see, very close. And it looks like that in itself, as well as that Fibonacci extension between waves W and Y. It looks like that order block, that 4-hourly order block of the last major low that hadn't yet been taken out. it looks like that the order block on the 4 hourly time frame was also acting as support, so giving some confluence at level between order blocks and and Elliott Wave. Okay, so since then, now what we need to do, we need to zoom in. But before I do that, I will just explain what these larger blocks are. So when you see the black order blocks on my charts, it's either going to be the monthly or the weekly time frame, and I believe it was the weekly. So let's go on the weekly chart. So what I've done is essentially, as I say, an order block is the contrary color candle prior to the big move up. So we've just outlined our red candle here that preceded this move up. So the top of it was at 4217 and the bottom was around 3643. So I've marked that candle out. So that's just to explain what that order block is. And then zooming in, let's zoom in on this. This is what we really need to focus on. So again, this is another significant order block here. This is the green candle that preceded this move down. So I've just marked out those price levels as well. And these order blocks, the top and bottom of them, often act as very significant support and resistance, especially on the higher time frames. So I always like to mark out the higher time frames. So okay, let's gradually zoom in on this. So you can see I've got an Elliott Wave count that I've made here. So we're going down to the 4 hourly, and in fact the hourly is probably the optimal time frame to look at this. So basically, since we formed our bottom at around 3122, I think it came down to, there we go, and so then we saw this move up, and I was talking about how it looked like an impulsive move. There was a bit of volume coming in. It wasn't a substantial amount of volume, so just pulling up volume. So it's a lot more clear on the daily time frame. You can see that volume. The volume is mainly explained by this aggressive move down. But there wasn't a significant amount of volume suggesting this was the bottom. There wasn't a huge amount of volume coming in here to suggest that it wasn't really the bottom and more of a bounce. So for that reason, I wasn't getting too excited, and I would describe as still being in a bear market for those reasons. But that said, the bounce can certainly go higher, because so far we've seen what looks like to me an impulse move up. So just take volume off for a moment. So yeah, we've seen this impulsive move up. So I've got this as a 1, 2, 3, 4, 5. And the reason for that, as I've shown in previous videos, there is a Fibonacci relationship between those waves. And then since then, we've seen a very complex and very boring price action within Bitcoin. I know a lot of people got fed up with this, and as a result, I've not posted so many videos just because there hasn't been so much to talk about. But as time has gone on, okay, we need to slightly move these waves here. So I've studied this now, and this is my optimal wave count. So as I say, we may have actually reached the end of a corrective sequence. There is that possibility. Okay, so it could all be a WXY, this move down since this impulsive move up. So first of all, Bitcoin likes its WXYs. We see it time and time again, and they often form these triangular or wedge type scenarios. So what we've seen here, this to me looks like a 3-wave move down. Yeah, you can probably blag a 5-wave, but clearly it looks a lot more 3-wave-ish. So I think we'll stick with that. So for that reason, I've called this W. Then we've seen another 3-wave sequence up to here. I'm going to call that X. And then following there, this is the bit that was tricky. Because there was an argument that this could be a 5-wave move down, this being 1, 2, 3, 4, 5. However, I'm thinking actually it's more along the lines of this being a 1, 2, 3. So 3 waves down, making a W to here. This is a complex WXY in the sense that you've seen like an A, B, C expanded flat, then an X wave, and then another 3-legged pattern up to here to make our X. So X in itself was a WXY, and then Y wave. So this final move down. So it looks like an ABC. So an A, B, C would form our Y wave to complete that. And another way to support that is just using a Fibonacci relationship. So if we use our Fibonacci extension tool and we start it from here, extend it down to here, which is where I'm saying the end of W is, and extend that from where X ends, drag it across. So where has price come down to? Okay, so we've just breached to the 0.618. So you'll often see that with a WXY, wave Y will often be a 0.618 extension of wave W. So we've met that criteria, we've slightly surpassed it, but we saw a strong bounce up through it. And why did we come down to exactly this level? Well, first of all, it looked like we were testing these order blocks here, but more importantly, it actually came down to the 0.786 fib retracement of this low through to this high. We bring it across. Look at that, so to the point actually, so it hits our 0.786 Fibonacci retracement. Okay, so there is a bit of a confluence going on here. So we've hit the 0.786 Fibonacci retracement. We've got a WXY completion. I will explain these red order blocks in a bit more detail. But you can see here also we've got a pattern forming, so it's like a descending wedge type picture if you're into patterns, and you can see essentially the converging price action following these trend lines. Slightly overshot it, which you often see to take out some of the long orders, the long stops just below this wedge. So it's often what you see where price will overthrow the pattern before going the opposite way. And now, yeah, as I say, we'll just zoom in on the daily. As I say, the red order blocks are my daily order blocks. So let's zoom in on this. Okay, so it gets a little bit messy here. Essentially, this green block before this moved down, not a significant order block so much just because the price action didn't trend for so long. Then you get another green block here before this moved down. So I've just marked out the bodies of these green candles that precede these downward trends, and you can see we've almost approached this the lower border of this daily order block here. Slightly fell short of it. Looks like that Fibonacci level, that 0.786, trumps the order block here, and that's why we saw a bit of a rebound from there. So is this a potential reversal here at the 0.786? That's the question. If it doesn't hold, that's very, very concerning for this possible bounce up. The reason being, we've hit the 0.786 retracement now. That's really a last ditch effort for people to really get into a position. They look for these retracements, they look for the 0.618, they look for the 0.5, they look at the 0.786. When it goes beyond that, that's a little bit concerning. So yeah, that is it would be concerning for the bulls, short-term bulls here, if price went beyond here. I'd say the bottom of this order block. So if there is a potential trade, as I say, for a bounce, it's against the major trend. As I say, we're still in a bear market, but if you wanted to trade a bounce, or personally, the way I'm looking at it, there is a potential trade with a stop below this order block. And if we go on the 15-minute, you can see clearly there's a bounce here, a corrective sequence, finding a bit of support at the daily order block. How much have we retraced of this? Let's have a look. So we've come down to the 0.618, and that almost ties in with this daily order block. So a bit of a confluence from that point also. Yeah, so that's one trade I'm looking at. As I say, if we just zoom out a little bit, let's go on the hourly, and we'll just stick a pitchfork on here as well. As I say, pitchforks really help us determine the trend. So using magnet mode, let's put our pitchforks. So we use our first three pivots being the first two waves. Okay, it's not struggling to get on the high there. We'll fine tune it in a moment. So these are our first three pivots. So first wave and our second wave. Let's just zoom in, make sure that's where it should be, and zoom out again. And this is the original pitchfork, which we don't want to use because this is a corrective sequence, so it's better to use a shift pitchfork. Alright, now it's all getting very, very messy, but I don't want to start taking things off the chart, so we'll try and make sense of this here. So first pivot, second pivot, third pivot. Then you get your lines drawn for you. What happened? Price shot through the median line, all the way down to the low median line, rebounded to the median line, came down to the low came down to the lower median line, fell short of the median line here just, and now we're finding support again at the lower median line. So we're also getting pitchfork support here as well. So we are getting a confluence. It is looking like a potential nice setup. That's just looking at it from pitchfork point of view. And as I say, let's stick on a bit of volume. Right, so we can see here a little bit of an increase in volume, nothing significant. Yeah, nothing significant at all. You know, I would want to see, you know, volume like this if it was going to be anything significant. So I'm still waiting for a bit more confirmation to come here. I would like to see, it would probably be a safer trade rather than getting in at the bottom because there's no real volume coming yet. Yes, we've had a corrective sequence. A safer trade would be to wait for market structure to break, so wait for us to take out this high. Then we've got a bit of a trend developing. Again, the stop would have to be at that point below this low here. Yeah, so that's the way I'm looking at it. As I say, it's a counter trend trade. We're in a bear market, so we're still going down. Okay. Just zooming out, looking on the daily. Yeah, we're still in a bear market. This volume here is not significant to mark out a major low. Okay, we've got tailing off volume here, where the highest point of the volume was in the impulsive move down. It wasn't at the bottom here, which tells us we're in a weak market. How far will we come down? It's hard to say. As I say, 3,200 was my primary target with a WXY. However, we could get a WXY XZ, so we can certainly come down lower. 3,000 is the next major level of support. Reason being is it acted as good resistance here and support here. Then the next level is around 2,500, which is the point, I think that was the 0.786, I think it's actually the 0.886 Fibonacci retracement of the move up to $20,000. So around 2,500, and obviously there is that order block in here. It's around the middle of this order block, around 2,400, 2,500. But I'm not going to go into that too much just yet. As I say, we've got a lot to talk about at this point. So that's just, as I say, what I'm looking for on the shorter time frames. But as I say, it's a weak market. It's against the major trend. So you've got to be very cautious. Got to have a tight stop. So I've mentioned what I'm looking out for. I'll probably wait for more price action to come in before making a decision. But yeah, I just really wanted to break down what I'm looking at from the general indicators that I use, the Elliott Wave, the order blocks, and pitchforks. Yeah, so I think we'll wrap it up there, guys. And yeah, let's see how this price action develops.